From our studios in Atlanta, this is CBT News. And here now, Bridget Fitzpatrick.
Hello, everyone. I'm Bridget Fitzpatrick. Thank you for joining us for the Kerrigan Advisors Market Update. Today, we're joined by Ryan Kerrigan. Ryan, thank you for joining us. I hope you, your family, and your team are all doing well and staying safe.
Thanks, Bridget. Same to you. It's nice to be here with you, albeit socially distant. I think we've got a good 3,000 miles between us.
Yes, thank you. We are doing well also. So let's dive right in. How did the public auto retail stocks perform last month?
Well, the Kerrigan Index had a monstrous recovery in April. The index was up 34%, and this compares to an S&P which was up just 12%. So the auto retailers had a really strong month in which investors really reevaluated the stocks and decided that they're going to fare much better in this pandemic than originally thought. Now recall, this comes off a disastrous March in which the stocks were down 37%. So we're just fighting back to regain a big chunk of those losses from March.
Sounds like all the stocks were up in April.
Yes, each of the component stocks was up. In particular, Sonic was up over 61%, AutoNation, CarMax, and Lithia all up over 30% for the month.
So with March down and April up, what is the performance of the Kerrigan Index year to date?
Well, we're still down for the year. The Kerrigan Index was down 22% year to date as compared to the S&P, which is down 9%. So we still got some room to make up.
What do you attribute the strong performance in April to?
Well, it was not car sales. Car sales were down about 50% year over year in April, which is the worst performance on record. But here's what did work. Throughout the month, the public auto retailers clearly communicated to the markets and to their investors their expense reduction plans and the liquidity they have to ride out this unforeseen disaster. The companies realized the markets were spooked, even more so than other industries. So each company took concrete steps to increase their liquidity and communicate their management plan. To cite a couple of examples, Asbury increased cash by $350 million by drawing down two different facilities. AutoNation extended its current agreement with JP Chase, pushing it out to 2025, providing them a total of over $1 billion in cash and credit. Group 1 made arrangements to push $300 million in bonds due in 2023 out to 2027 while reducing their interest expense at the same time. So each of these companies is making very specific moves to assure the market they have what it takes to ride out this rough patch in 2020.
Oh, good. So the world isn't going to end.
The world is not going to end. In fact, we predict automotive retail will rebound very quickly relative to the rest of the economy, just as it did in the 2009-2010 period.
Anything else notable from the publics in April?
Yes, there were quite a few announcements worth mentioning. As I mentioned, the publics are taking really significant cost control measures. Each has laid off or furloughed thousands of employees. Sonic made a really big announcement. The company announced a $268 million write-down of franchise value, citing a decline in market activity. That's about a 50% reduction in goodwill on the balance sheet. AutoNation announced that CEO Cheryl Miller is taking a medical leave of absence, and their chairman and former CEO Mike Jackson is stepping in to fill that role until she returns. And AutoNation also announced that Chief Operating Officer Jim Bender will add the title of President. And finally, Asbury announced a new CFO as well. Patrick Guido is coming from outside of automotive, specifically with a consumer apparel background, formerly at Lululemon Athletica.
Now, Ryan, you are communicating with dealers across the country on a daily basis. What are you hearing?
Our team is in discussion with dealers both large and small across the country, and this really varies by region. The Southeast has definitely fared the strongest thus far. The Northeast, Washington State, and parts of California have been impacted more than others. And looking forward, we've identified 4 sectors that will be particularly hard hit: aviation, tourism, entertainment, and oil and gas. So we believe that local economies that are more dependent on these 4 industries will see some real economic weakness and will take longer to recover than other parts of the country.
Do you think there will be any changes to the fundamentals of the business model due to the COVID-19 pandemic?
Yes, we do see some change. The shift to digital retailing just got a huge shot in the arm. The entire country has been forced on this tutorial on how to buy everything online for the last 60 days. There's no question this is going to impact customer expectations of dealers going forward.
Are dealers ready for this?
In some cases, yes, but in many cases, no. But they're going to be now. There's no question that this unique situation benefits the digitally oriented and progressive dealers, and a lot of other dealers are going to be in catch-up mode.
Does this add cost to the model?
There will be some additional costs. However, there are significant savings as well. So with the massive furloughs and layoffs in recent months, we're very confident dealers are not going to be hiring back all of those employees. This period of time will allow dealers to get more creative and prompt them to do more with less. And so there's some cost to digital retailing and home delivery, but we anticipate ultimately that automotive retail will be more cost efficient and more profitable going forward.
What about the impact to the buy-sell market?
Well, virtually all buy-sell processes have been slowed or stopped for the time being. We expect the buy-sell market to pick back up in the summer months after the dust has settled, possibly as early as June, but more likely July or August. This kind of shakeout experience will accelerate some decision making though, so we anticipate a lot of activity starting in the second half of 2020, probably setting us up for a lot of transaction announcements in 2021.
And what are you seeing with the buyers? Are there buyers interested in making acquisitions?
Oh gosh, yes. We have daily communications with auto retailers that are actively looking for acquisitions, and they're hoping that this will create more opportunity to do so. So there's no lack of buyers. The key going forward will be to get buyers and sellers to agree on what the new normal looks like, so we can get valuations that are mutually agreeable and get some transactions done.
You mentioned that Sonic Automotive took a large write-down on goodwill. Is this indicative of where we're going in the industry?
We don't think so. As I mentioned, the automotive retailers have gotten through this period remarkably well, and many will position their businesses to be more efficient and more profitable. And we know for a fact there's very strong interest on the part of buyers. So we need to get back to more normalized day-to-day operations, but do not anticipate any kind of significant downdraft in terms of multiples or blue sky value. That said, there will always be exceptions. There'll be some transactions that do get done in more distressed circumstances, but overall, valuations will be just fine.
Shifting gears now, how are inventory levels?
This is a really interesting question, and it varies a lot by region and by brand. So Cox Automotive tells us the days supply was 68 at the end of February and projecting 148 by the end of April. Now that said, there's some regions that did not see a big drop off in sales. So now we have dealers concerned about inventory levels that might be getting too low in the next few months, given the factories have been shut down for so long. So we're bouncing between concerns about oversupply and undersupply at the same time. This is going to be a very tricky question on inventory for dealers in the coming months.
Ryan, we saw the recent announcement from Kerrigan Advisors about the expanded services that you're offering in your consulting firm. Can you talk to us about that?
Yes, thank you. We have a lot of restructuring and turnaround experience as a firm, though we frankly did not call it out on our website or for our services because that was just not in demand in recent years. So we've formalized that offering in our consulting practice. We're offering financial restructuring and turnaround services for dealers that are navigating tougher times. We work with dealers and support them as they negotiate with their lenders, their vendors, and their landlords to achieve mutually beneficial outcomes.
Do you have a blue sky report coming out?
Yes, our first quarter report will be released in early June. Anyone can visit our website to sign up to receive that report.
There you have it, our monthly discussion on the buy-sell market with Kerrigan Advisors. Ryan, thank you so much for joining us today, and we look forward to talking to you again next month.
Thank you, Bridget. Good to be with you.
Thank you for watching the official news source of the retail automotive industry. CBT Automotive Network is a part of the JBF Business Media family.